Hello, my name is Jack Elder, Senior Director for Advanced Planning with Comprehensive Brokerage. Today, I'm going to talk about our SplitDollar administration services. The last two videos I recorded went over common SplitDollar plans. Now I'm going to help you and talk to you about how to keep those plans on track. So when someone enters into a SplitDollar plan or any kind of a complex insurance program, the carrier and most other general agencies, will help you put the plan in force, and then you're on your own. And in my experience, an unmonitored SplitDollar plan is, 9 times out of 10, things are going to get off track. We are different. If you market a SplitDollar plan with us, we stay involved to keep that plan on track. And if your client has an existing SplitDollar plan and no one's minding the shop, we can help you get it back into compliance and keep it on track, even if it wasn't purchased through us. So we help both on new SplitDollar plans that we market and existing SplitDollar plans that you run across in the marketplace. We cover both in the executive and in the private space. In the executive space, we can administer endorsement SplitDollar, collateral assignment, that's loan-based SplitDollar, or short-term deferral plans. In the private context, loan regime SplitDollar and non-equity collateral assignment SplitDollar. Our process is pretty simple. It takes a lot of information and knowledge and experience, which we've accumulated over the years. I certainly have. But the process is simple. First, we review the agreements, the SplitDollar agreement, any amendments, loan agreements, assignment forms that are filed with the carrier. Then we look at the policy itself. Is it on track to accomplish the original objective in the light of the SplitDollar plan? And in that case, we look at in-force illustrations and maybe even the annual statement. And then we look at the administration history. Was economic benefit recognized? Is interest being paid or accounted for? Then we develop a plan for the future with you and the client's other professional advisors to make sure that the plan stays on track. I'm going to go through two examples. The first one's called Cleanup on Aisle 3. This is in the executive place. The credit union and the executive, who was 40 at the time, entered into a golden handcuff plan where the credit union would cover 100% of the cost of the premium, and the executive could designate his beneficiary. And at the end of 10 years, the policy would be transferred to the executive within 2.5 months. That's called a short-term deferral plan. The plan was brought to us to see, new advisor trying to capture a new relationship with that executive, brought it to us for us to take a look at it and get our thoughts and opinions. So to cover what that plan, was meant to accomplish, the credit union and the executive, negotiated an executive compensation agreement where the credit union would cover the cost of a life insurance policy and be able to recoup their costs while the plan was in place. The executive could designate his beneficiary and recognize those economic benefit charges and pay income tax on them. And then at the end of the 10-year period, the policy would be transferred to the executive. So that's the plan, pretty classic short-term deferral plan. First thing we did was we reviewed the agreement. No concerns. The agreement looked fine. The assignments with the carrier looked fine. No concerns. We looked at how the policy was performing. It was a whole life. It was performing as expected, looked good. And then we looked at the administration. And this is where we had an issue. The economic benefit charges were never accounted for, never recognized. There's a disconnect between the payroll department at the credit union and the executive, and there was no as if there was no plan in place at all. That's the way that it was treated. So the remediation was pretty simple. Either the payroll department would have to start to account for the economic benefit costs, which were not significant, or the executive would have to pay them out of pocket. In this case, we were directed by the advisor and the executive to work with the payroll department. So that's what we did. And the future administration would be handled by the payroll department with some hand holding from us. So we would provide the economic benefit costs, both from the IRS Table 2001 and the carrier's 1-year term rates, so that that imputed income could be properly accounted for. So this is what the sheet looks like, and we provide both the carrier and the Table 2001 rates for the payroll department's guidance. So again, pretty darn simple for us. We looked at the agreements, the policy docs, the administration history, and we developed a plan for the future. What did that do for the executive and the credit union? Well, it preserved the income tax-free benefit. If God forbid, the executive had passed away without recognizing the economic benefit costs, the proceeds would have been taxable. It helped them get and stay in compliance. For the advisor, this is non-product value, and it increased his trust and credibility that now he has taken over that executive's assets under management. So that's what the advisor's goal was the whole time, and we helped him achieve it by making sure that the SplitDollar plan was on track. Second example, clean up on aisle 7 this time. It's in the private context. It's a loan regime SplitDollar, loan-based SplitDollar. Mr. and Mrs. Carl had used their exemption for business interests. They still had an estate tax liability, and they were funding a life insurance policy to provide that liquidity via loan regime SplitDollar. In this case, they were using a 9-year note, so they could take advantage of the midterm applicable federal rate at the time, which was 1.45%. So again, concept-wise, this looks good. I like the thinking. Interest-only loan with a balloon payment at the end. So let's take a look. The trust and the family struck an agreement that the family, Mr. and Mrs. Carl, would pay for the insurance in exchange for the promise to be repaid plus interest. We reviewed the agreements. They looked fine. They were as expected. We looked at the policy performance, and the policy was performing well. Wouldn't normally have any concerns, but I'm going to come back to that in a second. And then we looked at how was the plan being administered. Well, administration was pretty easy up to this point. Since it's interest only, there was no money that needed to change hands, no forms that needed to be filed because interest was being accrued and added to the balance of the loan, which brings us back to the policy performance. The initial design was to overfund a protection IUL type product, survivorship product, so that the policy itself could pay off the loan plus the accrued interest. Well, the policy was performing well, but it was never going to perform well enough to do all that. So that's where the issue lied. So first thing we did was forecast the note. Is the policy going to have $14 billion to retire the note plus the accrued interest? Well, no. So what are our options? Well, they could forgive part of the note, file a tax return. They could refinance that loan, kick the can down the road with today's low interest rates, although interest rates are going up and that 1.45% is a pretty good rate. They could make taxable gifts to the trust to cover the principal interest. They could reduce the death benefit to juice the cash value to pay back the loan. We looked at all of these options. Ultimately, we decided to wait and see. We still have time, and waiting and seeing and checking policy performance and keeping our finger on the pulse of interest rates, it doesn't foreclose any of these options. So I'm working with the attorney and the advisor to each year look at the policy performance, running a multitude of projections, annually reviewing the private refinance options if they want to pay that loan off with another one, all against a backdrop of the client's transfer tax planning. So originally, this SplitDollar plan was put in place kind of separate from the rest of the estate plan. Now it's a part of the estate plan, and I'm working with the attorney on an annual basis to make sure he's got the information he needs to give good advice. So again, process was simple. We looked at the agreements, the policy documents, how the administration history, and we developed a plan for the future. The benefits for the Carls are they redocumented their file so that, with their attorney, this looks like a loan, this is a loan, we're treating it like a loan, so that there's no risk of it being characterized as a gift down the road. We've provided realistic alternatives for how to roll out of this SplitDollar plan, and we're coordinating with the lawyer and the new advisor. So for that advisor, again, non-product value, increased trust and credibility, and the Carl still faced an estate tax liability, and he sold another $10 million policy, with a SplitDollar policy, by the way, with a much more realistic design. So when can we help? When you need to use SplitDollar to help one of your clients to solve one of their issues, we certainly help with those new SplitDollar plans. And we're with you for the long haul. If you have a client that has an existing SplitDollar plan and you come across it, we can help get that plan back into compliance if it's fallen out of compliance, and help it stay in compliance if that's what you need. The plan types we work with, the most common plan types in the executive space and in the wealth transfer space. Bring us any plan. If we can't help you, we'll be able to point you in the right direction, but chances are it falls into one of, into one of these categories. We are experts in SplitDollar, experts in complex insurance planning. And whenever you do a plan with us, you're not going to be left alone. Your client's not going to be one left holding the bag. We'll be there to help you. So please give us a call. There's my contact information. We'd be happy to talk about your next case. And with that, have a great day.